Good afternoon, everyone, and thank you for joining us for today's webinar, Implementing the Lease Standard, ASC 842, presented by LeaseCrunch and PBMares, a top 100 CPA and business consulting firm, as noted by Accounting Today and Inside Public Accounting. My name is Neena Shukla, and I'm an Assurance and Advisory Partner in our Fairfax office. It is my pleasure to be facilitating and moderating today. Today's webcast is being recorded, and you will receive a link to it along with the slides in our follow-up email to you after the broadcast. Before we get started, there are a few housekeeping items to cover. If you have any questions during today's presentation, you may enter them into the question box on your screen, and we will attempt to answer as many as we can during the webinar. If, however, we do not get to your question, a member of our team will follow up with you after the webcast. If you have any technical difficulties during the live webcast, you can refer to the recording or reach out to our team with any specific questions that you may have. So let's get started.
Thanks, Neena. This is Jess calling from LeaseCrunch. How's everybody today? Hope you're doing well. As we already mentioned, we have a lot of ASC 842 information to cover. We have learned a lot in the last couple of years about implementing the new lease standard, and we've pulled together a long list of tips that will hopefully help all of you get started. If you're not already thinking about getting started, now's the time. Don't delay. So a little bit about me and a little bit about LeaseCrunch before we begin. My name is Jess. I've been with LeaseCrunch just about 2 years. Prior to joining LeaseCrunch, I spent 14 years in property management accounting, specifically managing large accounting teams here in the Milwaukee market. So leases has been in my background for many, many years, mostly from the landlord perspective. So transitioning to LeaseCrunch, I learned everything I could about 842 and some other things. And here at LeaseCrunch, we are the fastest and easiest lease accounting software on the market today. Comprehensive, cloud-based solution. We help organizations implement the new lease accounting standards, ASC 842, IFRS 16, GASB 87 and 96. We are designed by CPAs, former Big Four auditors, former FASB staff, accounting academics, a great group of programmers, and we're always listening to what the feedback is from our users. So people like the team over at PBMares giving us feedback on what we could do better. We're always listening and enhancing our system all the time. Our agenda today, we'll talk about the implementation best practices, all kinds of things to help you understand and implement new lease accounting standard 842. We'll also do a quick LeaseCrunch demo. We'll show you just how easy it is to enter a lease into our system. Before we do, let's talk dates. Right out of the gate, I think it's important to know where we stand. The effective date for public organizations was for fiscal years beginning after 12/15/18. So think about the public organizations that you're familiar with. They have a few years of this under their belt. I formerly worked at Harley-Davidson way back in my career, so I always take a look at their public financial statements to see how they've recorded leases. I also have taken a look recently to companies like Microsoft, companies like Coca-Cola. How are they recording leases on their financial statements to give us a hint about what private companies might be doing too? For those of you with private companies, everybody else that's not public will implement the new lease accounting standard for fiscal years beginning after 12/15/21. So that means for the rest of us, if we have a calendar year fiscal year end, we're going to begin implementing the new lease accounting standard this year. We'll talk more about those dates in a few minutes, but before we do so, let's get to our very first polling question right out of the gate. Hannah, I'm going to kick that to you. When is the new lease accounting standard effective for non-public organizations? Now, for fiscal years beginning after 12/15/22, or it will never go into effect. All right, so many of you answered now. A few of you answered B, which was fiscal years beginning after 12/15/22, and that's actually not the right answer, and I apologize in advance for tricking you right out of the gate. No more tricks, only treats as we move forward. So next, we're going to talk about, let's see, where we go. We'll get our screen moving along here. All right, implementation best practices. Hopefully this list will help you get started. Attending today is a great first step. We know that many organizations are just beginning their implementation, so hopefully you'll walk away today with a good list of things to think about. What we did was we did a ton of research when we built this particular deck. We took a look at clients that we've been working with for many years, how they got started, how they have proceeded through lease accounting. We've also talked to clients recently in the last several months, and we did a ton of research that's available out there. So hopefully this is a comprehensive list of things to help you think about beginning your implementation. One thing I do want to mention, this was a comment that a fellow CPA firm that we work with talked about on a recent webinar. He said, you know, busy season's going to be busy because we know that busy season is busy. Why would you wait until February to think about the leases that you had in place last February? It might cost you more to wait. It might certainly cost you more stress to wait until you're finishing out your year or year end or it's January. So why not start now? Let's think about our leases that we have in place right now and then move forward. So as we begin to implement the new lease accounting standard, it's important to make some decisions about who will be responsible for leases. So let's organize a project team. First off, we're going to talk about executive level sponsorship. Because this is a big change to many organizations, it might be helpful to have Big Brother in the corner office helping us out, helping us make sure that the right people are involved, and maybe just telling them what to do if we need that too. We believe that the new lease accounting standard is not just an accounting function. It's kind of an everyone function. And depending on your organization and where you have people, you might have lease signers in multiple different divisions in your organization. So it might be helpful for them to be involved and understand the changes. We're going to determine which departments should be involved, and I've got a list here on the slide that might help us. People like our legal team, IT, procurement, treasury, real estate, facilities, marketing. In fact, just this week, in my house, we talk about leases all the time. My husband works in supply chain, and he mentioned that there's a lease that he's now responsible for. So leases are everywhere. We want to think about who's responsible for those leases and who is looking at them. Who's reviewing contracts for things like embedded leases? An embedded lease could be a lease that is part of a bigger contract or a supplier type contract. We'll talk about that a little bit later. We're going to think about who's responsible for reviewing leases and pulling out key data. We'll also be thinking about who's going to be in charge of data entry and reporting and consolidations. We're also going to think about, that project team is also going to think about who is responsible for data entry, who is responsible for creating and implementing new processes. We're also going to think about who's responsible for reviewing those processes for sustainability in the future. You know, we're going to implement these changes now, and then in 6 months or a year from now, are we going to think about, are they effective, or are we just doing it because we're just doing it? We want to make sure that the processes we're putting in place for the new lease accounting standard make sense into the future as well. Now that we've determined our project team, we'll need to determine who else on the team and in the organization needs to be trained on 842. And I would argue there's multiple different levels of training. The accounting team is probably going to need to be experts on 842 or pretty close to experts, but everybody else might just need a high-level overview. Why the change? Why does it matter? What's the effect on our balance sheet? And why does that matter? Those are some things that we might need to think about as we talk about training our team. We're also going to develop a staff communication plan, be thinking about how we're going to communicate among our users, among our staff about the changes. Why do they need to know the changes? And one example of that is identifying who is appropriate to sign leases and contracts. Now that every lease, most leases that we are signing are going to be added to our balance sheet and affect our financial position, it's going to be important to make sure those lease signers are familiar with the process. What's the change? Why does it matter? Isn't it okay for me to just sign a $10,000 monthly lease? Maybe it isn't. Maybe the accounting team needs to understand that before we proceed. It's also going to be important to talk with your IT team as it's related to software. If you're when you're choosing a software solution to handle your lease accounting, are you thinking about, is it cloud-based? Does that matter? What requirements does my IT department have for me when it's related to things like Excel add-ins, Excel downloads, SSO requirements, etc.? We're also going to want to make sure that we are allowing time for collaboration, time to get the work done, and also think about those lease accounting solutions and am I able to collaborate with my CPA firm? LeaseCrunch is able to do so. Another comment I would like to make is about foreign currency translations. We have a fair amount of customers that might just have a lease or two, and I think it's important to be thinking about currency translations right out of the gate. Is the system that you need handle that? Next up, let's talk about identifying the lease portfolio. As I previously mentioned, we want to make sure we've identified our entire portfolio, and that means thinking about divisions, expenses. I would argue that we'll want to be looking at expenses not just monthly, but maybe quarterly or annual expenses. That, something that might not just be a monthly recurring expense, could also be a lease. We're hearing from many of the organizations that we work with that have not yet started thinking about lease accounting. I would say now's the time to start. It's not just leases we have in place as of today. It's our leases that we have in place as of the fiscal year beginning after 12/15/21. So we're going to have to remember and think about the changes we made to those leases throughout the year and keep track of any new leases or contracts we've entered into throughout that year. I don't know about you, but I don't really want to think about what I did a year ago or 6 months ago, so I think it's best to get started now. We also want to make sure that we're in compliance under 840, so the old standard. I was on a webinar not long ago, and the partner that I was presenting with really stressed it is very important that you are in compliance under 840. We can't just go back and take garbage in from 840 and put it into 842 and expect everything to roll forward correctly. So if we had miscalculated our leases, or we had misclassified our leases, we want to get that correct before we're moving forward. Next, we'll determine our policy elections. If you're at all familiar with ASC 842, you'll know that there are quite a few policy elections and judgment-based decisions that we'll need to decide on. We'll talk about a few of those today, but we're not going to go into specific detail. But it's important to make sure that we're identifying those policy elections and documenting them as well. Next up, as we're thinking about the lease portfolio, we're also going to make sure that we abstract a lease. My years in property management taught me this. When we would receive a new lease, we would abstract it. And abstracting it means pulling up the key data that we need for this particular lease. When we're good at abstracting, we only have to go back to that lease. We probably never have to go back to that lease. We've got a good abstract. It pulls out everything that we need, specific, the important things, and we probably don't need to go back to it. Especially important when we're thinking about our lease accounting leases. We're going to pull out things like our start date, our term, our payment amounts. We're going to also determine if our contracts contain embedded leases. So now I've mentioned embedded leases a couple times. What does that mean? An embedded lease is an asset within a contract. So for example, my favorite example, and if you've ever heard me speak about this topic before, you've heard me say this example, but I think it really drives home the concept. We have a hospital and they have a contract with a supplier that supplies them with thermometer covers as part of that contract. As part of that contract, they also get the use of a very specific thermometer. That very specific thermometer met the definition of an embedded lease and needs to be recorded on our balance sheet. So it's important to be thinking about those contracts and if those contracts contain leases. The great thing about LeaseCrunch is that we have a free embedded lease identifier available to you on our website. You can just search LeaseCrunch embedded leases and you'll be able to find that embedded lease identifier. And the great thing about it is that we're going to give you what you need to document that embedded lease, to document that you've reviewed the contract, that it is or isn't a lease. If it is a lease, this question came up this morning when I was teaching a similar concept. What about applying the standard to that embedded lease? Now I've determined I have a lease. You'll still need to, you're also going to need to determine the value of the asset. So a little bit more legwork there, but important to make sure you're documenting those decisions. We're also going to think about identifying data gaps. Is there a piece of information that I don't have? For example, if the lease does not state the specific type of asset, how can I find that out? The example I like to use there is my accounting team going to know that this is a forklift, or does it just give a make and a model number? They might need to know it's a forklift so that they can make sure they're identifying correctly their classes of assets. So we're not going to talk very deeply into policy elections today. However, I want to spend some time on a couple of decisions as it's related to implementation. The first one is we'll talk about discount rates. The amendment to the standard that occurred about this time last year, maybe a little earlier, fall of 21, was that we are required to use the rate implicit in the lease, and if not implicit in the lease and not readily determinable, we can use the risk-free rate. The change last year gave us the option to use that risk-free rate based on classes of assets. So that gives us, that's a big help. We can decide to use different rates based on different classes of assets. We also are going to keep in mind why that discount rate is important and why it's important to make that rate based on classes of assets. So let's give an example. Let's say that I have a few real estate type leases. Generally, real estate leases are high dollar leases. And then I have a few copiers. And I have a couple of offices and I have a couple of copiers in each office. Those copier leases might be a low value lease. And maybe it doesn't matter what discount rate I use on those low value leases. But on my high dollar value leases, I might want to use a lower discount rate, or a higher discount rate rather, to give us a lower lease liability and ROU asset. So knowing that I can use different rates for different classes of assets is going to be important. We also want to talk here about transition leases. So first of all, what is a transition lease? A transition lease is a lease that is in place at the time I'm applying the new standard. So for many of you who have a calendar year fiscal year end, your transition leases were in place as of January 1 of this year. When I'm thinking about what discount rate I'm going to use for those transition leases, I'm going to use one approach. I'm either going to use the rate at the beginning of the term for all of the leases, or I'm going to use the rate at transition for all of the leases. Whichever approach you choose, you'll apply to your entire lease portfolio. The next election or decision I want to talk about is not necessarily a policy election, but it is an important decision we'll need to make. And that's related to materiality. Under ASC 842, the FASB specifically excluded a limit for materiality. If you're familiar with the international standard, you'll know that there's a $5,000 capitalization threshold or materiality threshold. FASB said, you guys make a decision. It's cool, which is great, although a little bit difficult. Another one of those judgment-based decisions that we need to make. So some of the things we keep in mind at implementation, especially related to materiality, is that it's important to think about the entire lease liability, not just that monthly payment amount. That monthly payment amount could be $50, but when we're thinking about a larger lease liability, maybe it's $5,000, and it's $5,000 material amount for your organization. That's how we'll think about our materiality threshold. It's also important to think about that day one impact. What's going to affect your balance sheet? Is that effect going to make a big change to your debt covenants? If you're not already thinking about how your lease liabilities and ROU assets are going to affect your loan covenants, now is the time to do so. We don't want to be stressed out at the end of the year or even in the beginning of the new year about what decisions should I have made and did I tell my bank? So we want to keep that in mind as we proceed. We also don't want to make the mistake of ignoring small value leases. It is important to be thinking about those as well. Next on the list is documentation. This should be no surprise to anyone. However, I think it is important to think about what we should be documenting. As far as ASC 842 and the new lease accounting standards, there's quite a few decisions to be made and we should document all of them. First and foremost, we'll talk about classes of assets. I've said that a few times now, and some of the policy elections we're going to make is going to be based on classes of assets. So maybe I'm going to treat my buildings a little bit differently than I'm going to treat my copiers or my vehicles. If you're a LeaseCrunch user, you'll know that we begin with a certain amount of classes of assets that you can use. You can fully customize those in our system, and it's a requirement of adding a lease. The next thing we'll do is document those embedded leases, why they are or aren't embedded, and why they are or aren't a lease. And then we're going to document our policy elections. For those of you who are familiar with LeaseCrunch, you'll know that we have a policy election template, and it gives you the list of exactly what you need in order to make the decisions you need to make. And I bet your auditor will love if you have your decisions already documented. We also know there are some other decisions we need to make as it's related to ASC 842. We call those judgment-based decisions, not a hard and fast rule, but some decisions that we need to make, one of those being materiality. It's not necessarily a policy election, but it is a judgment call on how we're going to approach our leases. And then finally, we'll talk about our transition approach. As part of our footnote, we're going to need to document what our transition approach was, how we've decided or not decided to restate prior periods, whether or not we have good documentation, and things that you're going to need as it's related to implementing the new lease standard. If it were me, I don't work in that world anymore, but if I did, I would think I would document all of the decisions just so I knew, just so I could look back and say, okay, here's what we did. So as we see users begin thinking about the new standard, we are often seeing them struggle with concepts, basic concepts of this new standard. So first step is understanding some key terms. We talked about our project team earlier and maybe getting our executive level leadership involved. And the first thing we'll want to do is understand some key terms. For example, what is an ROU asset? What does ROU stand for? How do I determine my lease term? By spending a few minutes now or a few hours now, learning the new lease standard, you'll be better off in the long run. There's quite a few key terms we need to keep in mind, things like lease and non-lease components. In fact, that's a policy decision that we're going to make. And we need to remember that also the definition of a lease has changed. It now includes things like control, identified assets, and substantive substitution rights of the lessor. Once we've identified our leases and understand key terms, next we'll need to understand the calculations and how our finance and operating leases are brought onto our balance sheet and then subsequently measured. Not only all of that, now there's additional reporting requirements. How we're reporting information on our, not only on our financial statements, but we're going to have some qualitative and quantitative footnote disclosure changes. And the quantitative part of that footnote disclosure includes 16 additional calculations, something that we need to be thinking about as we're talking about implemented. We'll show you an image of our footnote calculation and one right out of our software in a few minutes. We're going to want to understand the impact of 842 to our balance sheet, to our financial statements. We use a rule of thumb here at LeaseCrunch, especially when I'm training new users or new staff members. We talk about what is the impact? What really is the big deal? You can think about it when you think it like this. Say, for example, I have a 10-year lease and I have a $10,000 monthly payment. With a very low or zero discount rate, that's $1 million added to my balance sheet in the form of ROU assets and lease liabilities. So think about your office space or your warehouse space. That could be $1 million just for that one lease. For many organizations, that's going to be a big change to how we think about debt covenants. So we want to keep that all in mind as we think about implementing now. The last point on this slide, but probably the biggest point of our conversation here today, is do not underestimate the time it's going to take you. I am the queen of, that'll take me 5 minutes, and then it takes me 20. That's who I am. I can underestimate time like nobody's business. I would say for lease accounting implementation, you should begin now. If you haven't already started, start now. Spend an hour a week, spend a couple hours a week. It is important to not underestimate how long it will take you. And I think that the other thing I would say is don't underestimate the short on time equals stress later. We don't want to be surprised and stressed out. Let's get it done while we still have got a chance. We've got some time. So now let's talk about systems. We're going to transition a little bit. I left the accounting world to start working in software about 2 years ago, and systems become really important. No matter how you decide to keep track of your leases, we've got a few ideas on how to streamline that process. First and foremost, you're probably going to want to set up some new GL accounts. Important to remember that ROU assets and long and short-term lease liabilities for finance and operating leases should be recorded separately from each other and from other assets. You also need to be thinking about those leases that you've been reporting on during your current fiscal year. You've been likely recording expenses throughout the year, and now we're going to record and adjust those expenses to record specifically 842 expenses. How will you reconcile that? How will you handle your variable type expenses? An example of a variable type expense is something like a CPI increase. So I've got a payment that is dependent on an index. I'm going to measure that payment at the beginning of the lease, and then in a year from now, it's going to change. That difference between our lease payment and the new CPI increase is considered a variable expense. How do I plan on tracking those? As we're discussing systems, it's a good idea to talk here about bulk import. Bulk import's a fantastic way to import a lot of data quickly. It's also important to note what's excluded from bulk import templates and how to make changes after you've imported. Years ago, in 2015, I was on an accounting team and we transitioned our entire accounting database from one accounting system to another. Property management files, we had multiple companies we were managing, lots and lots of data. The consultant that we hired kept saying to us, validate. You have to validate your data. And I was young and a lot more inexperienced than I am now. And I kept thinking, validate? What does that even mean? What are you talking about when you say validate? And it wasn't until I completely messed something up, I reversed my debits and credits on a trial balance import, that I understood the importance of validating. When you're importing data, it's important to spend a few minutes to make sure that the information that you thought you added was added correctly. Lastly, we'll talk about customization. Is there any information about your company or your lease portfolio that you'll need to track that's not already part of a system that you're using? So here at LeaseCrunch, we talk about purchase order numbers are a good example of what might be a customized piece of information. Next up, let's take a second to talk more about those transition leases and transitioning those leases to the new standard. We know that there are going to be leases that were in place under the old standard, and now we're going to transition them to the new standard. Capital leases are now a name change. They're called finance leases, and operating leases are added to our balance sheet. I would also say don't forget that this is for all leases, not just your large dollar leases and not just for real estate leases. It's for everything. When we talk about transition, there's a couple of relief packages available. The FASB has allowed us some maybe easy buttons, if you will. The first is the package of 3, and it's elected to all of our leases as a package. The way this is stated is that it allows the lessee not to reassess whether existing or expired contracts are or contain leases, not to reassess the lease classification for any existing or expired leases, and not to reassess any initial direct costs for any leases, whether or not those costs would qualify under the new standard. So that's adopted as a package and for all leases. It's a time saver, and we're seeing many organizations opt into this. In fact, there's not very often that we don't see people opting into the package of 3. We do see people unsure, but we'll be able to talk, we can talk you through if you need help. The next transition relief is hindsight, which can be used with respect to lease renewals and purchase options when determining our lease term and assessing impairment of the ROU asset. This is also for an entire portfolio of leases elected as a package. We are not seeing most organizations opt into this. We believe that it's because applying hindsight might be more difficult than it's worth in this particular scenario. Finally, we have the opportunity to apply a single discount rate to a portfolio of leases with reasonably similar characteristics, such as a lease term or a class of assets. You could think about this as I have 6 vehicles, I've leased them all in the same day. The only thing different about them is the dollar amount. Maybe that's a portfolio approach as it's related to our discount rate. For transition leases, we'll need to identify our remaining lease term, remaining payments, existing balances, keeping in mind that determining that remaining lease term, we'll want to think about our options to renew and terminate. About 6 months ago, I was helping an end user get started with lease accounting, training a team of people, and they were wondering out loud, what does existing balances mean? Existing balances are things on your balance sheet right now for the leases you're transitioning from one standard to the next. Might be a good idea to start getting a handle on what those balances are and how they apply to each of your leases if you're not already aware. As we talk about transition leases, let's talk about the minimum information we need to get started. We're going to assume in this scenario that our initial application date, which is the date we're applying the standard to the lease portfolio, is going to be January 1, 2022. To begin with our transition leases, we need to know our start and end date, the term of the lease. We're also going to need to know the discount rate. We'll want to be thinking about how that discount rate and the policy election for discount rate and risk-free rates make sense for this particular class of assets. We're going to think about our remaining lease payments, our classification, and those existing balances. Once we've added all of that information to our system, we'll get our initial journal entry, which is going to do all the work for us. We'll make sure that we're accounting for our ROU assets and lease liabilities on our balance sheet separate from other assets and liabilities. And that brings us to our next polling question. What initial application date would you select? Beginning of the current period, beginning of the earliest period presented, or not sure yet? All right, looks like we have a good portion of both. Most everyone will do the beginning of the current period, some not sure, and some beginning of the earliest period presented. Great, thank you so much for sharing. I appreciate knowing what you're thinking in that regard. All right, next we're going to talk about recognition. So what does all of this change look like in practice? So this is the initial recognition shown in a typical journal entry form. You can see here that the differences are only that we're going to be recognizing our ROU asset and lease liability different from each other and different from other assets and liabilities. So if you haven't been thinking about that yet, you'll need to adjust your chart of accounts. You're going to need some additional GL accounts for this. But our initial recognition is going to be the same no matter what the classification. It's either operating lease or finance lease, and it's going to be the same. Both examples here are pulling in those existing balances for things like capital lease asset and liability, and for operating on the right, we'll see that we've got deferred rent. This is going to be a common part of your initial journal entry when we're recording our leases under ASC 842. Now this slide is going to show us our subsequent recognition. On the left, we have the recognition for our finance leases, and on the right, we have our operating leases, same as before. So on the left, we're going to record our amortization and interest expense for the finance ROU asset. Then we're also going to record additional long-term liability, which is the interest on the remaining liability, and we're moving a portion to that to our short-term liability account. Finally, our cash entry is going to be our monthly payment. I think it's important to point out here that short-term liability number is the liability due within 12 months, not necessarily cash payments. That could be a different number. On the right side, we'll talk about our operating expenses. Our operating lease. Our operating lease is going to show our operating lease expense, our subsequent reduction in ROU asset, and then we're recording again our short and long-term liability, and then again a cash entry. You can see here that our subsequent recognition is different based on which type of lease I have. So our classification is really what's going to affect the portfolio of leases and what the calculations look like. Let's talk next about reconciliation. As we begin implementing ASC 842, it's really important that we not only validate the data, validate our imports, but we want to make sure that what we've done for the year so far is tied out correctly. For many organizations, many of you have been recording your expenses throughout the year through your accounts payable system. And as you can imagine, now we're going to have different expenses to record. we're going to need to maybe reverse or reconcile the information we've recorded throughout the year and make sure our expenses are not overstated. One way to go about this is to reverse the current expenses, or the expenses rather, for the current year, and then post the new 842 entries, which is going to help us tie out to our lease accounting system. Depending on how many leases you have in place, might cause that reversal process to be a long one, so don't delay. We believe that many organizations are going to reverse what has done through the year and then post the 842 entries that offset. Some of those entries are going to be posted to a clearing account. Here at LeaseCrunch, we use a clearing account because we're not a payable voucher system. So we recommend you use a clearing account and still continue to record your AP entries, posting to a clearing account instead of an expense. You could also determine that the payments made through the year, what the payments were for the year, and use that to reverse your expenses under the old standard. Generally, under the old standard, generally is kind of with quotes, expenses under the old standard were lining up with payments. But don't forget, if you had deferred rent balances, those could definitely be different. Once you've posted those new entries, validate your data. Don't forget to figure out don't forget to think about the errors that could be made. How will you troubleshoot determining if you're off and out of balance? Who will correct that information? How will you make sense of that? Important to kind of keep that in mind. Next, we'll want to make sure that we are preparing for our audit. Your auditors are going to ask you questions about your transition approach. They're going to ask you questions about the decisions you made, and you want to make sure that you've got that documented as you move forward. And another polling question: which financial statement is primarily affected by ASC 842? All right, balance sheet and both. So really good stuff here. Balance sheet is the primarily affected financial statement. The income statement has not changed a whole lot. There could be some effect, but generally the biggest change here is to our balance sheet. So next, let's talk about the disclosure, and then we'll do a quick demo of LeaseCrunch. Our quantitative disclosure requirements have changed. We're going to include things like our financing lease cost, operating lease cost, short-term lease cost, variable expenses. We're going to keep track of things like our ROU assets obtained in exchange for new lease liabilities for operating and finance leases. We're also going to keep track of some cash flow information and weighted averages. It is important to remember that on the new footnote, we're going to include things like our weighted average remaining lease term in years for our finance and operating leases separately, and a weighted average discount rate for finance and operating leases separately, as well as a maturity analysis for finance and operating leases separately. If you have not figured out yet, finance and operating leases is separate throughout the entire new lease standard. Our qualitative disclosure is including information about our leases, general descriptions, the basis and terms and conditions. We're also going to keep in mind, we're going to include some things like terms and conditions, options to extend or terminate our leases, the existence of terms and conditions for residual value guarantees, restrictions or covenants imposed by the leases. We're also going to include things like our transition approach, how we chose our discount rates and why. So on the next slide, we'll see some information about exactly what that footnote will look like. So this is an example. We've replicated our footnote from the one that's right in the standard. If you take a look, I think it's on page 120 or something. This is what it looks like. So we've replicated our footnote. This is a screenshot of one taken right from LeaseCrunch. There's 16 additional calculations on the footnote now. So important to keep that in mind as we're proceeding through our lease accounting implementation. At the top, you'll see annual lease expense. This will show you the finance lease expenses, including your amortization and interest and your operating lease expense. In the middle, you'll see other information, including operating cash flows and financing cash flows for financing leases, the operating cash flows from operating leases, ROU assets obtained in exchange for new lease liabilities, weighted average remaining lease term, weighted average discount rate, and again, our maturity analysis. Everything separated by finance and operating leases. So not only are we concerned about adding our ROU asset and lease liability to our balance sheet, we're also going to want to make sure that we're accounting for our footnote correctly as well. So as we switch over, we'll do a quick demo of LeaseCrunch. We're going to talk through just how easy it is to add a lease. So it takes about 3 minutes to add a lease. On one of the previous slides, we included exactly the information you'll need for your transition leases. You're going to do a little bit of administrative setup, but then we're going to just quickly add a lease. Here in LeaseCrunch, we have a pretty straightforward UI. We wanted to make it easy because we know that the lease accounting standard is a little bit more difficult. So knowing what you know so far, you'll take your lease information and you'll start adding your leases to LeaseCrunch. Here in our system, we're going to have 5 or 6 steps as it's related to adding our lease. We're going to begin with our reporting entity, and on the right, when you see an asterisk, that's going to let you know that the fields are required. We're going to enter an office space lease. And like I said, some of the required fields, there's about 12 required fields to enter your leases. Optional fields are going to be things like our description or manufacturer. We're going to line up our asset types here in LeaseCrunch with the decisions we're making based on classes of assets. And then we'll include things that are relevant to us. If locations and lessors for our leases are important, we can certainly include those in LeaseCrunch. Then we're going to enter our start date, end dates, terms, ROU asset life. We can alternatively use one of the wizards available to us in LeaseCrunch, and our first wizard is our lease term wizard. The lease term wizard will help walk us through our early termination and renewal options for this particular lease. I'm going to begin by starting with my start date, and since we've talked a lot about transition leases today, I'm going to start with a transition lease. A transition lease is a lease that was in place under the old standard and we're moving it to the new standard. So here in LeaseCrunch, my start date's going to be my initial application date. That's the date we're applying the standard. Next, we'll select our end date or our term, depending on what we know. And when I click next, the wizard will walk us through a decision tree of early termination and renewal options. The first question is, are you reasonably certain to bypass your early termination options? Yes or no? Next is, are you reasonably certain to exercise a renewal option? If I hit yes here, we'll ask you for a new renewal date. So the system really walks you through everything you need to know about adding your lease and their dates to determine the correct term. When I click finish on the wizard, we'll then see that the start date, end date, and term are grayed out. That just lets us know that we used the wizard, and then we'll also see that our ROU asset life has been filled in. A couple of additional fields here in step 1 is going to be our comments. So if there's something relevant to the renewal options or termination options you'd like to include, you can do so here. And then we've got the opportunity for custom fields. Custom fields could be anything other than what's already available in LeaseCrunch. Lots of users are adding custom fields for purchase order number. I was in property management. I always want to know who signed my lease, so I have a signer field. Throughout the system, when you click next, we're going to save our progress and move us forward through the workflow. Step 2 is going to be lease payments and classification. So throughout our system and throughout the screen, you might be noticing the blue question marks. The blue question marks throughout our app are going to be our in-app help. And whenever you select our in-app help, we're going to open up that help guidance in a new tab and take you pretty close to the topic that you selected. Today I've selected discount rate. We talked a little bit about discount rate today. Our discount rate is going to be the rate implicit in the lease when readily determinable. Sometimes we have what we need to derive that date, so we've built a calculator for you. For those of you who are non-public organizations, which is probably everyone on the call, you have the opportunity to use that risk-free rate. So we've got the risk-free rates linked here in our help guidance as well. Handy tools available. In fact, there's about 78 blue question marks throughout LeaseCrunch that will help you guide you through both the lease accounting standard and the system. We'll select our discount rate. Then you'll see that we have incentives received and initial direct costs. For those transition leases, we've already accounted for this information, so there's no need for us to enter it here. We'll enter it later. But if you're entering a lease that begins after your initial application date, maybe you have a lease that started today, you'll be able to enter that information. Next up, you'll see our payment information. We're going to select our frequency, enter our payment amounts, number of payments, payment start date. We're going to add additional line items as we need them. The next section is going to be existing balances under previous lease guidance. So this is going to be for those existing balances we were talking about. Things like capital lease asset and liability that were on your balance sheet before. Remember that our capital lease assets, capital leases are now called finance leases, and we're going to want to bring them into the system so that our footnote is appropriate. It's correct moving forward. So we'll bring in our things like capital lease asset and liability, or maybe deferred rent for those operating leases. We'll pull those balances in here, and then everything's going to flow through the ROU asset as part of our initial journal entry. Next up, and our next wizard in LeaseCrunch is our classification wizard. Our classification wizard is going to ask you the 5 criteria questions that will help you classify your lease as operating or finance. Under the new standard, there is 5 classification criteria. Under 840, there was only 4, so we've got another question to answer when we're thinking about classifying our leases. And based on the answers we give here, the system will classify the lease correctly for us. Today, I'm going to select that this lease is an operating lease. You can also choose to make those wizards required. So if it's helpful to you, you can absolutely make the wizards required so that for every lease you walk through, you have to use the wizard. Again, next saves our progress and moves us forward to the next step. Our step 3 of adding a lease is our GL accounts. As a former accountant, this just might be my favorite part of our system. So first and foremost, the system remembers that I have classified this lease as an operating lease. Then the system only pulls in GL accounts associated with those operating leases. Our GL accounts can be fully customized to match your chart of accounts for lease accounting. And then your initial journal entry and subsequent journal entries will have everything you need based on the GL accounts that you're using. We also have some expense allocations here, so we could allocate our expenses if we need to. And the system will make sure that that math adds up to 100%. Oops. The system will also correct you if you mess it up. Next, saves our progress and moves us forward. Variable expenses and non-lease payments seem to be a hot topic these days. Our variable expense and non-lease payment screen is optional. Some leases just plain don't have that information, but if you do, you'll enter that information here, very similar to what we saw on step 2. And step 5 is going to be document storage. Here in LeaseCrunch, we have unlimited file storage. So you can include the lease files. That way your lease files, your lease accounting, your lease policy documents can also be uploaded under administration. Then everything is in the same system. One final step, we have an optional step within LeaseCrunch that you can turn on a review and approval workflow. A review and approval workflow is a fantastic tool that can be used if you are having someone else in your organization review leases. Great for accounting teams, great for if you have an intern or a consultant helping you out that you want to approve their work before it's reported on. So just a few minutes to add a lease, and then let's take a look at some reporting. I'm going to narrow down my lease grid just by selecting a few things from my filters. And when I select my leases, I'll be able to run reports at the bottom of our My Leases screen. All of the reports from LeaseCrunch are going to export into Excel, and they're going to have 3 tabs. I'll be able to fully customize my journal entry columns so that they can export in a format that makes the most sense to me. Some of our users like to import the journal entry into their financial database. I'm going to run all 3 of my reports here. We have a very exciting new update coming soon. I saw it in progress this morning. That's going to give us a report center so I can run reports just one after another. So first I'll open up my journal entry. Our journal entry reports, like I said, everything is going to export into Excel, and it's going to have 3 tabs. The first is going to be our first month entry. This is our journal entry. You're going to see this is separated by our finance and operating leases. The criteria tab of any reports in LeaseCrunch is going to show you the criteria that I used to run this report. And the lease tab is basically all lease data. Every piece of information that we have about your lease is included here. And for those of you who have seen me before, and I know that the PBMares team may have not have seen this yet, we have a brand new feature, which is our lease ID. This is a hyperlink that takes you right to the view information screen for each lease. So if you had an adjustment to make, you can easily get back to that particular lease. Next up, we'll take a look at our amortization schedule. Maybe, here we go. Our amortization schedule, again, exports into Excel. This is the tool that you can use to make sure that the leases are entered correctly. You'll use those balance fields to verify and match your GL. You'll use that to reconcile. We talked a bit about reconciliation today. Then you'll see your criteria and leases tab, just like we saw before. And finally, let's take a look at that footnote. Give that a second. My Excel is a little bit grumpy today. There we go. So our footnote, very similar to the screenshot that I had shared in the deck. Our footnote at the top is going to include our things like our lease expense information. In the middle, you'll see the other information. This is the big heavy hitter stuff. Our ROU assets obtained in exchange for new lease liabilities, our cash flows, our weighted average remaining lease term, our weighted average discount rates, and then you'll see that maturity analysis. Remember, everything is separated by finance and operating leases. So that is LeaseCrunch. I think we have one more polling question, and we'll have some time for Q&A. How prepared are you to adopt ASC 842? Not a trick question, just interested in understanding where you're at, how you're feeling. Well prepared, somewhat prepared, not at all prepared, or somewhere in between. All right, we've got only a couple of well prepared. That's as I suspected. Everybody else, somewhat, somewhere in between, not at all prepared. Hopefully our time here today has helped you kind of think about how to get started, things that you could, do now and be thinking about identifying your lease portfolio and really be thinking about beginning your lease accounting 842 implementation journey. And it looks like we have time for questions.
Thank you, Jess. Yes, we do have a few questions. Let me see. Is the session being recorded? Yes, everybody who's registered will get a link with the recording. A second question is, can you suggest where to get a sample lease capitalization policy?
Oh, that's a good question. I don't think we have one, which is not helpful.
And I would say that, anywhere that you look for policy guidance, you'll get samples, but really you want to work with somebody to help develop it and cater it to the individual person, because every company is going to be different and every company's information is going to be different.
Couldn't have said it better.
Handouts. I'm not sure if we're doing handouts or if it's just a recording link.
I think the slides too.
Yeah, you will also
okay.
receive a link to slides, correct?
Okay.
Yes, and then there's two handouts. Those are bios for Neena and Jess as well.
Okay, so you will get those as well after this. And then Jess, is there anything that you would say are some of the most frequently asked questions that you'd like to share? I know we've got a few more minutes left.
Absolutely. And a very common question that we get is, how frequently do I change my discount rate? And the answer is, you really don't, unless your lease changes. So if you have an amendment, so for example, if you change your lease term, or if you add space or reduce space. When you remeasure a lease, then you'll likely change your discount rate. But your discount rate is kind of something you'll think about at the beginning of the lease, and then you won't think about it again. You won't have to worry about if it's something you'll adjust on a monthly basis or quarterly or yearly. It's going to remain the same, static throughout the life of the lease term. Other questions that we get often are, do I actually need to add, if you become a LeaseCrunch user, do I actually need to add my capital leases to LeaseCrunch? And really you should, so you have a good footnote. As you saw, it's a one click, so you don't have to worry about accounting for those differently. Other questions, can I adjust my GL accounts is a common LeaseCrunch specific question. Yes, absolutely. You can fully customize your lease accounting GL accounts. That way the journal entries are in the format that you are used to. And then transition relief is always a hot topic. How do I know what I should do? And obviously those decisions are pretty specific to each organization. We can obviously talk about pros and cons of that transition relief, but if it works best, it is an easy, the package of 3 specifically is an easy button where you will not have to reclassify those leases, not have to worry about those initial direct costs, and it's just going to save you time. So I would say that's kind of the heavy hitter, frequently asked questions as well.
Sounds good. And I don't believe, let me just check, see if a few more came in. Okay, we do have another question here. What are examples of variable expense and non-lease payments?
Yeah, good question. So variable expenses and non-lease payments is a kind of a hot topic lately. It seems like every single day we're answering these questions. So a variable expense is something that could change. And there's lots of examples, and I'm not going to pull it up at the moment. We've got some great help guidance on it. Oftentimes, the way I best describe a variable expense is I have a lease payment that is going to change over the life of the lease based on an index. So maybe CPI index. I have a base rent amount that's $5,000 at the beginning of the lease term, and then it's going to increase based on CPI. Your lease payment is going to be that $5,000, and then that increase over the years is going to be a variable increase. It's going to be a variable expense. We're going to record that separately because it's not going to affect the ROU asset and lease liability. And that's okay because FASB said that's good. Another example of a non-lease payment, if you're choosing not to combine your lease components, that's a policy election that you can or can choose to opt into or not. If you're not combining your components, you could think of CAM as a non-lease payment. Something like a parking expense could be a non-lease payment. So just a couple of examples. We have a ton of guidance in our help guidance regarding those particular topics.
Perfect, thank you. And I think that brings us to an end. So thank you, Jess. And thank you for everybody joining us today. We hope you found our presentation useful and informative. Please do not hesitate to reach out for more information, or if you would like to move forward with the implementation for your organization. If you sent us a question that did not get answered, we will follow up with you. You will also be receiving an email with the links to today's presentation and the handouts, as we mentioned. And at the conclusion of today's webinar, you will receive a brief 3-question survey, and we ask that you take a few minutes to complete it. Your responses will help us develop any future webinars as well. So for future webinars, please check our website for more details and to register. Thank you again, and goodbye.